Hello, I'm Matt Parrott from Tax Shop Accountants, a chartered tax advisor in Wellington, Somerset. Today's topic, which is a massive topic in itself, but I'm just going to skirt around a couple of the issues because I'll be talking forever. This is about contractors, tax for contractors, how they're going to work with agencies, umbrella companies, working for one firm. It's a very, very, very tricky area. I mean, a simple example of let's say you leave your PAYE job and you go back to work for them on a self-employed basis. It's not quite right. There could well be issues there. You go back, you're doing roughly the same job on a self-employed basis. The company that you're working for, if you are generally self-employed, not limited, they may well have a problem in that they should probably have put you on PAYE. So in that very simple example, if you're self-employed, then great, it's not really your problem. That's probably the company you're working for's problem. But it's unlikely in that scenario that you'll be allowed to be treated as self-employed. So usually the employer company or an agency will say that you need to have a limited company. And the reason they ask for a limited company is to cover their own backsides, basically. If you're trading through a limited company, they can pay you gross, and there's no fear that they will get stung for the tax. It's as simple as that. That's why you go to an agency and they give you two choices. They say get your own limited company or use an umbrella company. So we'll look at those two choices. So firstly, the umbrella company is in fact all it means is you're employed by an agency who deduct tax, national insurance, employees' national insurance, employers' national insurance that they would have to pay on your behalf. They charge you, plus they charge you their own charges. So it's furiously expensive going through an umbrella company. It really is. You know, you're probably looking at 35-40% deductions from your day rate. So, you know, it's not a great option, but as you'll see in a minute, it may be your best option. Option two is a limited company. And you often find that the agency has thrust the limited company on you. They say, well, we've bought you a limited company. All you need to do is invoice. I mean, that is so oversimplistic, and that will lead you to a load of problems. Now, this happens all the time. I see it. A client comes to see me and says, I've been given my own limited company by my agency. What do I got to do? And they've got no idea about the responsibility that they've now got as a company director, how to get their money out, what to do. They've just got this limited company, they're invoicing for their day rate, and they think, oh great, all I've got to do is pay 19% company tax at the end of the year. It's so far from that. Generally, in these situations, there is something called IR35 to watch out for. And it's becoming more and more well known. You speak to most contractors and they've heard of it. They might not be doing what you're meant to do under it, but they've heard of it for sure. If they haven't, I'll be very, very surprised. IR35 has been around for over 20 years. There's now two types of IR35. One for the public sector, one for the private sector. The public sector is very much changed in April 17, and basically you are either IR35 determined by the employer or the agency, or you're not. Mostly you are. And the IR35, just going back a little bit, it basically means you're going to get penalised. If you come under IR35, it's going to cost you a shed load more money, a load more tax and national insurance. It's not something you want to get involved with particularly. People run scared of it. It's not nice. So if somebody says to you, you're within IR35, it's going to cost you an absolute fortune in tax, national insurance, compliance. It's not great. So public sector, you will be told whether you are or not. And this is, at the time of this video in February 18, IR35 in the public sector has been around since April 17. It's really caused a lot of grief for contractors, and people have been leaving the public sector because of it, because they know they can go back to the private sector where IR35 is a self-assessing tax. So if you're in the private sector, you decide whether you think you're in IR35. If you're in the public sector, they decide for you, and generally they say, well, we don't really know if you are, so we're going to put you in it. We're going to cover our backs, put you in under IR35, and you're going to get taxed to hell. There's there's such a wide subject for public sector IR35. I'm not going to go into it in this video. Perhaps I'll do it in another video. But for private sector IR35 contractors, this is still a very subjective tax. It's a self-assessing tax, i.e. you decide whether you are in IR35. And most people, surprisingly, decide they're not within IR35 and take a chance on it. Perhaps not the best idea, but that is what happens in the real world. You go along to a huge, one of the huge building sites or whatever, and you'll find loads of contractors with their own limited companies not operating IR35. Now, whether it's right or wrong, it all depends on the individual facts. But IR35, as I say, is a subjective tax. It's basically, very basically this is, there's so many different rules. It's whether you're self-employed or not, really. In a nutshell, are you a self-employed person? Do you take risks? Do you have your own tools? Do you work for various different people? Are you under sort of supervision, direction, control? And a lot of clients will come to me and say, oh, no, I am genuinely self-employed. They don't really understand it. So there's always a risk that the client will think they're not within IR35 when really they are. There are ways of sending your contract to HMRC to review it, but unsurprisingly you'll find that most of them, they'll say, I'm afraid you are within IR35, if there's any doubt at all. So what tends to happen is people make their own choices of whether they are within it or not within it. So they self-assess and they prepare their accounts under a normal basis and have a fairly decent tax percentage because of it. If they're not within it, they will use their spouse if they've got one. They'll claim all their expenses and their tax rate will be relatively low. If they were within IR35, it will be the same as being employed, basically, plus paying an accountant to do your books for you. So that is not a great position to be in. So really, it's really not a great choice between an umbrella and an IR35 company. They're both fairly poor choices, but those are the only two choices. You are not allowed to work for an agency as a self-employed person. You have to have a limited company. There's agency regulations that were changed a couple of years ago, so agencies are not allowed to treat people as self-employed. If you're a builder working through an agency, you shouldn't be a sole trader builder anymore on CIS. You should be a limited company. And then you've got the IR35 question again. So umbrella, not a great way of doing business. IR35, limited company, again, not fantastic. Neither are great to save tax, but at the end of the day, that's what it is. That's what the government have said the rules are. If you're IR35, you're just going to have to choose between that and an umbrella company. If you're not IR35, or it's borderline, you may decide to take a punt on it. That could be risky. You may decide to get your contract approved. But that is the position for contractors, certainly in the private sector. Public sector, again, a different video, a different time. Thank you very much.